The broadcast is now starting. All attendees are in listen-only mode.
Hi, good morning. Today is Wednesday, May 25th. I'm Donna Will, Professional Development Coordinator for the Developmental Disabilities Administration. We welcome you to, oh my goodness. It's a webinar on self-direction, and we are, I don't have my screen up. I am very sorry. Okay, it's the Developmental Disabilities Administration Self-Directed Services Reasonable and Customary Wage Rate Updates. And today we have Christy Coolbreth, Statewide Coordinator of Self-Directed Services, Rhonda Workman, Director of Federal Programs and Integrity. And before we start, I'm going to go over a few things about the webinar. Everyone is in listen-only mode, and there are two options for listening, and that is by computer and phone. If you have trouble hearing, you can go to the panel on your right and go to the audio section, and then the buttons are there to switch. We have 8 handouts all together today. We have 5 in the handout section. If you find that they're not loading, we also have them on our website, and we will also email those to you after the webinar. We're recording the session, and we can have that available for you also. If you want to hear it again, it's on YouTube, and it will be on the DDA website. So now I'd like to introduce Rhonda Workman.
Thank you, Donna, and good morning to everybody. Hope you all are well. Christy and I are really excited to join you this morning to share some information and updates related to reasonable and customary wages, and we'll touch on a few other things. Donna, can you go to the next slide?
Yeah, give me a sec.
Sure. And as Donna's working on that, we've discovered a couple of our handouts are not opening. So we'll work through those details, but as Donna said, we will be sharing those handouts afterwards. There is actually a total of 7 handouts, and the information that's in the handouts is actually posted on our website, so that you'll be able to access that too in that way. So starting out with this slide, which notes our agenda today. First, again, I want to thank you for joining us as we share information and updates. And my name is Rhonda Workman. Our agenda today's discussion includes an introduction of rates and how they relate to self-directed budgets, staff wages, and vendor rates. We will also share an overview of budget considerations and updates to the DDA's reasonable and customary wages and rates. Christy is going to share information about participant options to consider related to these topics today and these updates. We are also going to share reminders about the Appendix K unwinding. We're going to provide some links to resources and also the DDA Regional Office Self-Directed Service leads in terms of their contact information and names. And then we're going to answer your questions. So please feel free to add questions in the question box, and we'll be going through those at the conclusion of our presentation. Today, we hope to share information as easy to understand plain language. We know some information may be confusing for some participants on our webinar, but please note that we have our coordinators of community services, our support brokers, fiscal management service providers, and DDA staff are on the call and can also provide additional assistance and information after the webinar. As Donna shared, this webinar is being recorded so you can review the information, and so that others who were unable to join us today can also have the opportunity to hear the information. You go to the next slide now, Donna. Thank you. So let's have our introduction slide. First, self-direction budget allocations are based on DDA rates. Self-direction reasonable and customary wages and rate standards are also based on these DDA rates. Reasonable and customary means the normal pay or charge rate for services. Some DDA rates are increasing or may be decreasing due to rate changes and a cost of living adjustment. New rates for DDA will become effective July 1st, 2022. Some of these rates may have gone up a little and some may have gone down. For self-direction, the self-direction reasonable and customary wages and rate standards were updated based on these new DDA rates. The new self-directed reasonable and customary standards will also become effective July 1st. The new standards are included in our handout section today and also posted on our self-directed services dedicated webpage. Next slide, please. There are several things to consider before making decisions to change staff wages or vendor rates. So we're going to talk a little bit about budget responsibilities and expenses. So we're going to talk about these in terms of payments of employer-related costs and other things to consider. First, participants are responsible for various costs related to their services, their staff, and their selected vendors and providers. These costs come out of the participant's budget. Participants must ensure that their budgets can support all these employer-related costs. Self-directed budgets are used to pay for these employer-related costs and includes things like the staff wages, employer-related costs like taxes and benefits, vendor and provider costs, and other goods and services. Next slide, please. So participants can offer staff benefits, and benefits are optional unless required by law. So for example, in Montgomery County requires employers to pay and provide sick and safe leave. Other examples of benefits include health insurance premium payments, paid time off, training, and travel reimbursement like mileage. Benefits must meet reasonable and customary standards. And the cost of these benefits are different from staff wages. And so it's important to understand that because these are additional costs that is included in the participant's self-directed budget sheet. Next slide, please. Now we're going to start to talk about reasonable and customary staff wages and considerations. Participants should hire enough direct support staff to meet their needs. Participants should minimize the need for their staff to work overtime. Overtime means staff are working more than the normal amount of work hours. Staff working longer hours can impact their health and the quality of services they provide to participants. It is also important to understand that a higher overtime payment is required by law. Overtime payments are an additional cost to the participant's budget. Therefore, before approving overtime, participants must ensure they have funding available in their budget allocation. Next slide. So participants have employer authority to hire qualified staff for the specific services authorized in their person-centered plan. When hiring staff, the participant determines the staff wage. Staff wage means the hourly pay the participant authorizes for their staff for time worked. It does not include other participant employer-related expenses, such as those taxes or optional benefits offered by the participant we just talked about. The DDA establishes reasonable and customary wages for participants to consider. Reasonable and customary wages were updated based on the DDA rates that become effective July 1st. Participants' self-directing services can establish their own staff wage based on these updates. Again, the staff wage must be reasonable and customary, as noted in our handouts. Participants can hire staff at their county's established minimum wage or higher based on the reasonable and customary standards. By law, participants must offer at least minimum wage for that county. There's several things to consider again before making those final decisions about increasing wages. Next slide, please. It's important to understand that staff wage increases are an option participants can consider. This means participants can offer their staff a pay wage increase, and participants are not required to offer staff pay increases. It is their choice. Pay increases can be based on staff performance. Pay increases can also be offered at any time during the year. For example, during the annual person-centered planning process, or during the staff's annual date of hire anniversary. Next slide, please. As per DDA's policy and guidance, participants can submit a request to exceed the staff wage range. The request is submitted using the Self-Directed Services Staff Wage Exception Form. This form is available on the DDA website and in policy. A higher wage can be used as noted in the DDA guidance and policy. The higher wage is used for the following counties: Calvert, Charles, Frederick, Montgomery, or Prince George's. The exception maximums are based on the provider vendor maximum rate minus the 14% for staff-related taxes. Next slide, please. This is a screenshot of the reasonable and customary wage standards that will be effective July 1st, 2022. Again, it is posted on the DDA webpage and also included in the handouts of the webinar. So let's now start to talk about reasonable and customary rates. Next slide, please. Participants self-directing services can also hire vendors and providers for approved services in their person-centered plan. Vendors and providers must also meet service qualifications. These provider qualifications are noted in the federally approved waiver and DDA's policies. We've included a link here to the Community Pathways waiver as a reference. Participants establish payment rates for their vendors and providers. Similar to staff wages, vendor and provider rates must be reasonable and customary. Next slide, please. Participants are also responsible for the vendor and provider cost. These costs come out of the participant's budget. Participants can negotiate lower rates with their vendors and providers. Next slide, please. So let's talk about the difference between vendors and providers and staff. So vendors are considered self-employed. Vendors are responsible for their own taxes and business-related expenses. Participants do not pay for vendor taxes or other related business expenses. The vendors are paid a flat fee or a rate. Next slide, please. Providers are considered businesses. Participants can hire DDA providers. Providers are responsible for all their employer-related responsibilities and costs. Participants do not have to allocate additional funding to pay for provider staff taxes and other related business expenses. Providers are also paid a flat fee or rate. Next slide, please. Participants can increase the rate they pay vendors and providers. Participants are not required to increase the vendor or provider rates. Rate increases can be based on performance, similar to what we've talked about for staff. Rate increases can be offered at any time during the year. Similar to wages, it could be a participant can consider increasing during the annual Pcp process and vendor anniversary date. Next slide, please. The next few slides are screenshots of the reasonable and customary rate standards effective July 1st, 2022. Again, this document has been posted on the DDA webpage and in the handouts. This slide includes services such as assistive technology, the behavior support services, community development services, including the group of 1 to 4, the dedicated enhanced 1-to-1 staffing ratio, and the dedicated enhanced 2-to-1 staffing ratio, in addition to day habilitation. Next slide, please. This slide is a screenshot of services associated with our new employment services. It also includes environmental assessment, environmental modifications, the family and peer mentoring, family care training and empowerment, family caregiver training and empowerment fees, housing support services, and information related to individual and family directed goods and services. Next slide, please. This screenshot of rates includes the live-in caregiver, nursing support services, participant education training and advocacy, personal supports, including the enhanced rate, remote support services, respite care services, and support broker services. Next slide, please. And this last slide related to the rates includes the supported living, in addition to transition services, transportation, and vehicle modifications. Next slide, please. If the rate or wages for a service has changed, the participant and their team may need to make changes to employee wages or vendor rates. Christy will now be sharing some options that participants can consider when making changes. First, we want to make sure that we note and stress that it is important for all of us to remember the participant is always the final decision maker. They may seek assistance from their team or decide to make decisions on themselves and complete tasks themselves, but they are the final decision maker related to wages and rates based on the reasonable and customary standards. Next slide, please.
Good morning, everybody. It's lovely to be with you guys today. I am going to go through the options that people have regarding the changes that Rhonda just talked about. Option 1 is to use cost savings or unallocated funds to increase wages and vendor rates. Option 2 is to complete a revised plan to increase wages and vendor rates. And option 3 is to consider increasing or decreasing rates and wages during the annual PCP process or at a later time. These options are for people with current PCP and approved budgets. People with auto-extend person-centered plans to support your needs and budget, please work with your team to get those submitted. If you need assistance, the regional offices are available to support you and your team. Next slide. The fastest way to change rates and wages for your vendors and employees using the updated standards is to complete a budget modification form. The most recent budget modification form that participants and teams should use is the DDA COVID Form 5. With the support of their CCS and the rest of their team, participants can calculate the cost of wage and rate increases and move funding from cost savings or unallocated funds to pay for them. Keep in mind, it's important that budget modifications can be completed at any time. So let me state that again. Budget modifications can be completed with cost savings, meaning funding unused from your current budget, or with unallocated funds, meaning funding that was not allocated when you wrote your self-directed budget sheet with your team. Keep in mind that you may not want to invite all of your team to discuss wage or rate increases. It might make sense to only invite members of your team who will not be affected by rate or wage changes to make in your budget. If unallocated funds have been used since April, you will need to make sure you have a correct amount of unallocated funds calculated. you and your team can use the optional Unallocated Funds Tracker tool in the DDA COVID Form 5 to track those funds. Now I'm going to review the steps for this option. It's okay if the steps are a little confusing. Right after I share all the steps, I'll share an example that should help. Step 1 in the budget modification process is to calculate the funding needed for the increase that the participant has chosen. The funding should include wage increases and taxes associated with them until the end of the plan year, and rate increases for vendors and providers should include just the increase until the end of the plan year. Next slide. Step 2. After doing the calculations, you will also need to complete and update other forms. To move funds across line items or to use unallocated funds in a line item, use the budget modification form. Like I mentioned on the previous slide, the most recent budget modification form is the DDA COVID Form 5. If you change the wage of employees, you will need to complete a change form from your FMS. These forms are provided by your FMS and should be submitted to the FMS. The ARC has change forms available online. MedSource has change forms available that they email out. You can reach out to your FMS directly for these forms or ask your support broker or other team member for support in binding them. We also hope to include them in the webinar. We're hoping that will happen today. Family as staff form may be needed if updating family member wage. This form is available on the DDA website. Your CCS support broker or other team member can help you find and complete this form. It should be submitted to the FMS, and your CCS should upload the changed form to LTSS. DDA should approve family members to work over 40 hours at the end of Appendix K. With option 1, the modification and paperwork can be completed ahead of July 1st with an effective date of July 1st. Next slide. Today we're sharing new tools that will be helpful for people and teams as they make changes to PCPs and budgets. We're happy to share a budget modification checklist and a revised budget checklist. These documents are linked in this presentation, our guidance, and available on our website. The checklists are completed by the participant or their legal guardian or designated representative and their CCS. Other team members may help too, but since changes that are made often affect how those other team members are paid, it's important that the participant with the support of their CCS is in the lead. CCSs have a unique role in people's teams because they advocate without conflicts of interest, meaning the changes that people make to their plans and budgets do not affect how they are paid. It's a really special role among the paid people in teams. Everyone else who is paid there can be affected by the changes that are made to plans. The budget modification checklist will help participants in their teams make sure the budget modification is complete and correct. It also helps everyone see that program standards, like the reasonable and customary rates and wages, are met. Finally, and most importantly, it makes sure that the person understands what changes are being made. Next slide. Steps 4 and 5 are completed by other members of the team. Step 4, your CCS uploads all the forms and documents into LTS Maryland client attachments. The CCS should then email the forms to your chosen FMS. Step 5, when they receive the forms from the CCS, the FMS will review them to make sure they meet DDA standards. They let the team know if any documents are missing or incomplete. If everything is correct, they process the forms to give the raises and increases you asked for. Next slide. If your plan has already been approved with a July 1st or later date, and you want to use the new reasonable and customary rates and wage standards, you can use this budget modification process. Keep in mind that the budget modification can be submitted before July 1st, but cannot be effective until July 1st or on your approved PCP effective date. Next slide. This is my favorite part, so let's go through an example of how this might work. So we have J Doe. They have a plan that began on September 1st, 2021, and it ends on August 31st, 2022. They have 2 employees, one working 30 hours of community development services each week, and another working 25 hours of personal support services each week. They also have a nurse that they contract for 2 hours per week. Jay meets with their team and reviews the new reasonable and customary standards. They see that on July 1st, the services of CDS, personal supports, and nursing will all have higher rates. Jay decides to give their employees a $1.25 raise. Jay negotiates a new rate with their nurse to be $5 more per hour. Jay reviews their FMS budget statement with their team and decides they won't have enough funding to use cost savings from their current budget, but they know they have unallocated funds that should cover these charges. Jay meets with their team, their CCS support broker, and close family member to work on the math. Jay intentionally does not invite their employees or nurse to come to this meeting because they will be discussing the new rates and wages. Next slide. Participants and their families can receive support from their CCS support broker or other team member to review this math. Keep in mind that there may be conflicts of interest for any paid member of the team to help with this activity. Like I mentioned earlier, the CCS has a unique job that keeps them from having any conflict of interest in supporting participants. So if you're a CCS on the call today, please pay close attention. The formula to change an employee's wage is the number of hours worked per week times the amount of raise the participant wants to give times the number of weeks until the end of the participant's plan year. Taxes should be calculated by multiplying the 14% or 0.14 to this amount. Looking at the calendar below, we can count the weeks and we see that Jay has 8.5 weeks left in Jay's plan for July and August. We'll round that up to 9 weeks just to make it easier. So let's do the math. This is for Jay's CDS employee. The employee works 30 hours per week times the $1.25 raise Jay wants to give times 9 weeks. That equals $337.50. When we multiply that by 0.14, we get $47.25 for taxes. Now for personal supports. The employee works 25 hours per week times the $1.25 raise Jay wants to give times 9 weeks. That equals $281.25. When we multiply that by 0.14, we get $39.38 for taxes. We'll write these totals down for when the modification is written out. Next slide. Now let's look at vendor rate. The formula to change a vendor rate is the number of hours needed per week times the raise amount agreed upon by the participant and the vendor times the number of weeks until the end of the plan year. There will be no need to calculate taxes for vendors. Looking at the calendar, we see that Jay has the 8.5 weeks of services before their plan ends on August 31st, and we're going to round that up to 9 weeks again. So let's do the math. The nurse works 2 hours per week times the $5 agreed upon raise amount times 9 weeks equals $90. Next slide. Now we'll work on the modification. We'll be using the DDA form number 5 to do this modification. Jay lists their name, the date they want the modification to go into effect. For this, it's July 1st, and they list their FMS and region. Jay's budget allocation from LTSS is $60,000. When they wrote their budget with their team, they allocated $42,000. The form calculates the total unallocated funds as $18,000. Please note that the DDA form number 5 will continue to be used after June 30th until further notice. Next slide. Now we take the numbers we calculated earlier and input them into the form. Starting on the right side, services being increased or added, Jay adds SDS wages, personal support wages, and nursing support vendor rate increase at the amounts the team calculated. You can see those numbers added by the red arrows. They add the W code for each service by looking at the budget sheet. The team adds the two tax lines together, $47.25 plus $39.38 equals $86.63, and adds that to the tax line. The form calculates that $795.38 is needed to move from unallocated funds. Jay and their team double check this math using a calculator. Then going to the left side with the green arrow, services being reduced or taken from unallocated funds, Jay adds that they'll be taking the $795.38 from unallocated funds. Jay then signs the form. Next slide. One last step that Jay wants to do is to track the unallocated funds they're using. They use the optional tracker to put in that they have $18,000 in unallocated funds, and they are reducing that amount by $795.38 on July 1st. It's important to remember that if a participant has used unallocated funds from April to now, they may want to use the optional tracker tool to account for each time they have moved money from unallocated funds. Next slide. Once Jay completes this modification, they work with their CCS to complete the budget modification checklist. They confirm that the budget modification is correct, complete, and follows all of DDA's standards. Jay's CCS submits the budget modification and checklist to Jay's FMS. They complete the appropriate forms too. Jay completes an FMS change form for both employees to account for a raise on July 1st. They submit these to the FMS. Jay's CDS employee is their sibling, so Jay also has to update their family and staff form. They make sure their CCS submits it to the FMS and uploads it to LTSS. Jay also notifies the nurse of the FMS that they will have a new rate effective July 1st. Next slide. Now we're going to move on to option 2. If you want to change wages and rates on July 1st, but do not have cost savings in your current budget or unallocated funds available to do so in a modification, you may complete a revised PCP and budget. Step 1 for this process is to work with your CCS and other team members to submit a revised person-centered plan on or after July 1st. The budget allocation will be updated with the new rates when this is completed. If there are no other changes to the PCP, the CCS should note the revision reason as budget allocation recalculation. This will help the DDA know the change to the PCP. Next slide. Step 2 is to work with your team to complete the self-directed services budget sheet. You would choose Revise Budget in the drop-down menu, then note the updated total budget allocation amount beside the red arrow using the recalculated LTSS Maryland total plan cost, and put in the desired updated rates and wages for all the services you're changing. You need to make sure that the services and number of hours and units match the authorized services and units from your PCP and detailed service authorization. Next slide. The checklists are completed by the participant or their legal guardian or designated representative and their CCS. So this would be our revised budget checklist. Other team members can help too, but since changes that are made often affect those who are being paid, it's important that the participant with the support of their CCS is in the lead. Just like the other checklist I shared, the revised budget checklist will help participants and their teams make sure the revised budget is complete, correct, meeting program standards, and that the participant understands any changes. Next slide. Step 4, completing the forms. If you change the wage of employees, you will need to complete a change form from your FMS. These forms are provided by your FMS and should be submitted to them. Like I mentioned earlier, we have included both FMS change forms as an attachment on today's webinar, and the change forms can be submitted to your FMS once DDA has approved your revised plan. Family and staff form may be needed if updating a family member wage. This form is available on the DDA website. Your CCS, support broker, and other team member can help you find this form and complete it. It should be submitted to the FMS and your CCS should upload it to LTSS. Unlike option 1, the revised PCB and budget can only be submitted on or after July 1st to use the updated reasonable and customary wages and standards. And the forms can only be submitted to your FMS after the PCP and budget have been approved. Next slide. The next steps are completed by other members of the team. Step 5, your CCS has a PCP checklist that they complete each time they help you with a new, annual, or revised PCP. Your CCS uploads all of the forms and documents into LTS Maryland, and then submit your PCP to DDA. The CCS should then email the forms to your chosen FMS once the PCP is approved. Next slide. The DDA will confirm that the PCP is being revised to update the budget allocation and approve. Next slide. Step 7. The CCS sends all the forms you worked on together to the FMS once the PCP is approved by the DDA. Step 8. When the FMS receives the forms from the CCS, the FMS will review them to make sure they meet DDA standards. They let the team know if any documents are missing or incomplete. If everything is correct, they process the forms and give the raises increases you asked for. Next slide. Let's go through an example. Just like our first example, J. Doe has a plan that began on September 1st, 2021 and ends on August 31st, 2022. They have those 2 employees, one working 30 hours of CDS each week and another working 25 hours of personal supports each week. They also have the nurse that they contract for 2 hours per week. Jay meets with their team and reviews the new and reasonable customary standards. They see that on July 1st, the services of CDS, personal supports, and nursing will have higher rates. They decide to give their employees a $1.25 raise on July 1st, and they negotiate a new rate with their nurse to be $5 more per hour to begin on July 1st. However, this time, they know they do not have cost savings or unallocated funds available to cover the raises. They schedule a meeting with their CCS on July 1st to complete a revised PCP. Next slide. When Jay and their CCS meet to revise the plan, the new budget allocation on July 1st is $65,000. Jay and their team then go to work on the revised budget. Jay and their CCS add their name to the budget spreadsheet, include that Jay will have 2 employees and 1 vendor. They include the date the budget goes into effect, which is 7/1/2022. They note that it's a revised budget and state the waiver that Jay is in. Then they note on the budget spreadsheet that the new Ltss DSA is $65,000. You can see that here on the screen with the 2 red arrows pointing to it. Next slide. Now on to update the services. Jay starts with the community development services. That employee currently makes $15 an hour. Jay wants to increase the wage by $1.25. So they note that the new rate is $16.25. They include the 30 hours per week of CDS that is noted in the DSA and account for every week in the year, 52.143. They include 14% for taxes in the tax line item. Next slide. Now on to personal supports. That employee currently makes $15 per hour as well. Jay wants to increase the wage by $1.25, so they note that the new rate is $16.25. They include the 25 hours of personal supports that is noted in the DSA and account for every week of the year, 52.143. They include 14% taxes in the tax line item. Next slide. Finally, on to nursing services. Jay was paying this vendor $75 per hour and wants to change it to $80. They include the 2 hours per week of nursing that is noted in the DSA and account for every week in the year, 52.143. Jay makes sure the service is listed in the nursing vendor line so that no taxes are counted. Next slide. The final budget total leaves Jay with $3,529.92 in unallocated funds. Once Jay and their CCS submits the revised PCP to DDA, they can complete the appropriate forms too. Jay completes an FMS change form for their employees to account for the raise on 7/1. They submit the change forms after the DDA approves the revised budget. Jay's CDS employee is their sibling, so Jay also has to update their family of staff form, and they notify the nurse and the FMS that the new rate effective on July 1st will be $80. However, the FMS cannot apply these raises until DDA reviews and approves the revised plan. To make sure it is approved as quickly as possible, Jay makes sure that the revised plan follows the guidelines of the waiver and the reasonable and customary wages and rates. Next slide. Now on to the final option. Participants can choose to not move any funds or revise their plan to change rates. You can choose to change rates and wages during your annual plan process or at another time during the year. It's important to note that you are not mandated to make any wage or rate increases unless changes in minimum wage standards affect your employees. Next slide. Some rates may go down for some participants. You can continue to use rates and wages you're using until your next annual PCP date. During your planning process, make sure that your wages for employees and rates for vendors and providers is within the current reasonable and customary standard. You will need to continue to follow Department of Labor requirements when you change a pay rate. It's important that rate pay changes for employees is fair and equitable. Your support broker and other members of your team may be able to support you in following Department of Labor guidelines. In addition, some people may need to make changes when the services they are authorized changes. Next slide. In this final example, we'll see Jay choose not to make any immediate changes to their employee rates or vendor rates. Jay makes a to-do list to help them see what needs to be done. Jay works with their support broker and other team members to evaluate their employees once per year based on the employee's anniversary dates. Their CDS employee is due for an evaluation in October 2022, and their personal support employee is due for an evaluation in January 2023. Jay knows that when their team meets to plan for their new year, that they will include merit-based raises for these employees in the PCP. Jay also negotiates new rates with vendors each plan year. They work with their nurse to agree on a new rate that will go into effect on September 1st with the new PCP. Next slide. Now, that was a lot of information. I want to take a few seconds to review all of the options we explained today. Option 1 is to use cost savings from your budget or unallocated funds to give raises based on new rates. You do this by completing a budget modification form. Option 2 is to revise your plan to include raises in your SDS budget sheet. You do this by revising your PCP and budget sheet. Option 3 is to consider raises during the annual planning processes or at another time that works best for you. People who self-direct can increase rates and wages at any time they'd like within the reasonable and customary rates and wages. Participants do not have to give a raise, even for cost of living. And it is best practice to review employees and vendors regularly to make sure they are providing the kind of services you want. If they aren't, it's good to give them written feedback on how they can do better. If they are, it's great to reward them with a raise. A support broker or another member of the team may be able to help reviewing employees and vendors in a fair way. Next slide. We also want to remind everyone the importance of ensuring staff, support brokers, vendors, and providers have current trainings, certifications, and licenses. Various communication has been shared by the DDA, DCS, and FMS to participants and their team. It's the participants' responsibility to ensure their staff, support brokers, vendors, and providers meet the program qualification requirements. Next slide. FMSs are tracking information related to this data with the DDA. This slide is a visual of support broker training. We can see that 91% of support brokers currently meet the support broker training requirements. 9% do not meet those requirements. The DDA is offering support broker training every Tuesday in June to support this requirement. I've looked through the numbers and the people who are still have outdated certifications, and I've tried to call every support broker that is active on the list. Participants and teams, just a reminder, you can ask your support broker to show you their support broker certification to make sure they are up to date. Support brokers, if you know you have completed the certification class in the last 2 years, but do not have your certificate, please email me at christina.culbreth@maryland.gov. Next slide. This slide is specific to CPR and first aid certificate training requirements. For CPR training requirements, we see that 80% have met them already and that 20% have expired certificates. For first aid requirements, we see that 79% of staff meet that requirement and 21% have expired certificates. Again, it's important to ensure all staff, support brokers, vendors, and providers meet the requirements in order to be paid for services after the DDA Appendix K flexibility ends on June 30th. I will note here, when we look at first aid and CPR, it is a requirement for support brokers to hold those certifications as well. Next slide. Here we have a list of our resources that are available today. we have a link to our self-directed budget sheet that we shared in April with those updates. We also have a guidance related to how we discussed how to make budget allocations from your unallocated funds, how to take funds from your unallocated funds in April. And then we have the COVID Form 5 link here too as well. Next slide. As I mentioned earlier, we are providing support broker trainings for every week in June to accommodate people to make sure support brokers have their certifications before the end of Appendix K. You can register using the DDA calendar link, and that link is available on our slides that we'll get out today. Next slide. Our regional offices are always available for people if they need assistance in any of these processes. On this slide, we've included the email addresses of all the people who you may want to contact in your regional office. Next slide.
Thank you, Christy. Appreciate that great information that you've gone through and shared the options for people to consider, in addition to the importance of reminders about Appendix K unwinding and the resources for us. So really appreciate that. Now we're going to go through questions that we've received and answer them. Please note again, we are available for follow-up, the regional office self-directed leads and Christy for additional questions. I know we have shared a lot of information today. We hope that it's been very helpful for you with the examples. Information is posted on the website, and we will also be posting the recorded webinar so that you can refer back to it. And we know that as you're listening to us and learning some of this information or hearing it for the first time, it may be confusing or you may have missed some. So we're going to try to answer the questions based on our understanding of the question that you're asking. So the first question, and first let me acknowledge and welcome Patricia Sestoki, Director of Provider Services or Program Services, with us today to help us with some of our questions. And so, Patricia, we were talking about person-centered plans, and our first question is, what is the time frame after the PCP has been received and for the DDA to complete their review?
Thanks, Rhonda. The DDA reviews PCPs within 20 days and will make determinations. The determinations include a clarification, consultations, approval, and denials.
Thank you, Patricia. Christy, we've got a lot of questions, and I know you've done a lot of great talking, so I'm going to ask the questions, but feel free to kick them to me if you'd like, okay? So our first question is, will form number 5, so I believe we're referring to the DDA COVID number 5 form, continue beyond the end of Appendix K?
It's a great question, and I know there are some dates on the form that might make that a little bit confusing. But yes, please use the COVID Form 5 form after June 30th for this work. The form has all of the abilities to do the things that we mentioned today. So yes, please continue to use it until further notice.
Thank you, Christy. And we're working on updates to the form. So once those have been updated, we will issue that so that everybody knows the new form and have you know, some time frame for that to become effective and phase out the COVID form. But as Christy says, until further notice, continue to use the COVID form number 5 for those modifications. The next question relates to the same topic, but wanted to know if the COVID Form 5 could continue to be used for unallocated funds. So yes, as Christy's saying, for modifications and unallocated funding use, yes, the COVID Form number 5 should continue to be used. The next question is, if we submit a budget modification after July 1st, can we date it July 1st so that the raises can start on July 1st? Christy, you want to share some thoughts on that and I'll add some?
Yeah, I would say yes, but I think keep in mind that you want to do it as soon as possible. That's what I would say. I don't know if you have any other thoughts about it, Rhonda.
Sure. And so a couple of things that we talked about today and in the slides was we know that some individuals have already submitted their person-centered plan that may be effective for July 1st and have been approved or in the process of being approved. And because these reasonable and customary standards are just being shared today and will become effective on July 1st, the participants may want to then make adjustments in their budget sheet related to the new standards. For that, Christy shared that you can complete that budget modification form and put for that to be effective July 1st so that the new standard wages and rates can be utilized for those plans that are already approved. I would say in general, after your plan has been approved, we really, as Christy said, you should submit that budget modification as soon as possible for that effective July 1st date. We would not be considering budget modifications, let's say in September, October, or December for a 7/1 effective date going backwards. So we really need to have them within a timely period of the effective date for the raises, and they should be going forward and not backwards. The next question is, what is the maximum hours a family can work a week? Christy, can you talk about hours family members can work and talk about the difference between under the public health emergency Appendix K flexibilities versus what's in the waiver, approved waiver program after the public health emergency and any authorizations needed?
The Appendix K flexibility does allow for family members to work over 40 hours per week. After the end of that flexibility, DDA will have to approve over 40 hours per week for a family member. I will say also that we want to be really careful that people are receiving services per week that are listed in their person-centered plan that they've already showed an assessed need for. So if someone has 40 hours per week of personal supports in their PCP, I would say that they do not have an assessed need for over 40. And if they do, it would probably be appropriate for the team to meet and complete a revised plan to account for those hours that are needed that aren't in the plan. I hope that makes sense.
Yeah, Christy, thank you for sharing that. And as we talked in the beginning of our presentation, that the participant needs to keep in mind the expenditures and that are associated with their budget. And we talked about overtime in the beginning and the importance of having enough staff to meet your needs and the potential effects on staff that work long hours and the quality of service that they're going to provide to you. Lastly, I would say under the Appendix K flexibility that allows family members to work more than 40 hours, a couple things to keep in mind. As Christy said, that should be based on what's authorized in the plan. And so if the participant is not receiving supports through their day program, the family member may be able to provide some of those supports, but the cost for those overtime have to come out of the participant's budget. And so it's really important for the team to support the participant in tracking those funding, because overtime authorization under the Public Health Emergency Appendix K does not mean that there was additional funding allocated for overtime. The person must stay within their allocated budget. Our next question, Christy, is about the Family of Staff form. And it says, does the Family of Staff form need to be updated every time an applicable staff person receives a wage increase?
Yes. If the person is changing a rate for a family member, the Family of Staff form should be updated every time. Yeah.
Right, because remember our Family of Staff form has that chart which specifically notes the rate for that family member or the relative. So as Christy said, it's important that we make sure that that's update and current. Christy, as you were talking about option one, one of our attendees asked, how will the participant be notified that the option one changes has been approved?
I really like this question. So in option one, we are saying that you can complete a budget modification form to move funding over and simultaneously at the same time send over a change form. So we are asking that the team use that budget modification checklist to make sure that their information is correct and that it is complete. And the FMS will check to make sure the budget modification is correct and complete. And then the change will happen. So I would say that either your FMS will notify you that the change has been complete, but the best way to know is you'll see it, employees will see it in their paychecks, and vendors will see it when they are paid for vendor requests, when they're paid for their invoices. I hope that makes sense.
Thank you, Christy. And as Christy said, we're hoping that the new checklist will help the teams and the participants, support brokers, coordinators of community services, and fiscal management service staff to review and ensure that the forms are complete and accurate and meet the standards, for processing and reviewing them, that the calculations are correct, that the form is completely filled out and such. That will help to make sure that the process moves smoothly from the participant to the CCS to the FMS, and then those changes being made in a timely manner. Our next question is related to CCS receiving training related to self-directed services and whether there's requirements for those type of trainings. Patricia, would you like to address that question? We may have lost Patricia, so we'll come back to that. We have a couple of questions about whether the slides can be emailed. Absolutely. I believe the slide download and the handouts are working, but after the presentation, Donna will be able to share the slides with people who have registered for the webinar. The next question is a little bit long, so I'm going to read it slowly. It says, are the maximum customary rates based on the LTSS rates that were effective July 1st? So I'm going to answer that part first. No, the reasonable and customary rates are based on the new rates that will be effective July 1st. The next part of the question says, will the LTSS rate changes be effective July 1st? So yes, these rates that we're sharing today for reasonable and customary wages and rates will be effective July 1st. So until July 1st, the May 2021 rates that are posted on the website are still the current rates and standard through the end of June. The person was asking questions specifically about different services and noting that the rates may differ than what's currently in LTSS. So it's important for us all to understand that the new DDA rates effective July 1st will be entered into the LTSS system and go live July 1st. You may recall Christy was talking about the revised PCP process, and through the revised PCP process would be used when people want to give an increase or a raise in the staff wage or provider vendor rates and do not have cost savings or unallocated funding to meet that need. In that case, the revised PCP will need to be completed and submitted on or after July 1st so that the new rates are noted and incorporated for the detailed service authorization section. Hope that is helpful in terms of understanding. So timing is important. Our new standards go effect July 1st. The new rates are being effective July 1st in the person-centered plan, and the modification options are available for cost savings and unallocated funding that you can consider and start to queue up now. Our next question, Christy, is what if a staff is working CDS hours and they make more than what is in the new customary rate for July 1st? Do they have to get their pay cut?
That's a good question. There are a couple of options. So like we mentioned in the webinar, if you have rates at a higher rate and the rate has been brought down, we are allowing you to continue to use those rates until the end of your plan year. But once you plan for your next year, you will need to adjust those rates accordingly. You have a couple of options when you plan for the next year. The first would be to make that pay cut and notify your employees accordingly, and do that equitably and fairly across all your employees, and make sure they understand why it's happening. Or you can complete, if you feel like that person does require that rate, you can complete an exception form that's on our website.
Thank you, Christy. So we got some questions about option 2. And in option 2, we talked about the revised PCP process, but we also talked about part of that process includes completing a revised self-directed budget sheet. And through our example, we talked about the number of weeks that would be used. And so we're getting some questions about why would 52.145 be used for the number of weeks for a revised PCP? Can you answer that part first?
Sorry, I was coughing a little bit. I can. So we want to make sure, and I might answer this partially and then have Rhonda complete it too, but when we're doing a revised plan, we do want to confirm that the changes made to it are able to withstand an entire plan year. That's why you would do all of the weeks for the year. But if you're changing it in the end of the year, you would receive the increase accordingly based on the number of weeks left in the year. I think that's right. Rhonda, you might be able to speak to that more.
Sure. So I guess I would add saying that, on our website, we have the DDA self-directed budget sheet instructions. And in the instructions, we talked about when a revised PCP is completed, and we talk about noting that for the year. In the instructions, we talk about the importance of noting that some of the funding may have already been used during the course of the year, and the importance of reviewing those Fiscal Management Services statements to know how much of your budget remains to the end of the year, so that you don't overextend or overspend your money. We do know that in the system that there are some participants who revise PCP may not account for a full 12 months. And so in those situations, the DDA has worked with teams in terms of kind of looking at prorating those revised PCPs and budget sheets. But the guidance shows that if you revise your PCP, then it would be for the budget sheet is updated and it reflects the full year. But the participant needs to, with the support of their team, keep in mind that they've already spent some of that funding that was already allocated for the whole year, and make sure that they do not overexpend. Okay, just going through, these are kind of similar question themes there. So the next question, Christy, is related to family as staff. And it says, can family members as support staff continue to receive overtime payment after pandemic policy expires? I know we've touched on this, but let's just answer this question again.
Absolutely. So after Appendix K expires, those flexibilities that were applied to our waivers will go away. And so we will be able to, we'll look directly at the waivers for the rule. So in our waivers, what it says is family members can work up to 40 hours unless otherwise authorized by the DDA. So if family members do need to work over 40, that does need to be reviewed and approved by the DDA after Appendix K.
Thank you. We had a comment here from one of our attendees asking us to mention that if family as staff are used to support participants, that they are also required to have current first aid and CPR certification. So that is correct. If family members are going to continue to provide services after the public health emergency, they must meet all of the service qualification requirements. That would include the first aid and CPR requirements. Let's see. So Christy, if someone was in need of a new service that's not listed in their person-centered plan, what would they do? Do they use the budget modification process, or do they do, what would they do? Do they do the revised plan?
That's a good question. For right now, through the end of Appendix K on June 30th, if you want to add a service, you can do so with cost savings or with unallocated funds using the COVID-5 form. We explained this in our guidance on April 8th, so that's available online, as well as the webinar that we presented. Rhonda and I did that together in April. After Appendix K is, first, if people do not have cost savings or unallocated funds available, they can complete a revised plan to ask for a new service if that is needed. Additionally, after Appendix K, we will let you know how to go about that. We'll give more guidance on how to ask for a new service. But for right now, the revised plan process and the budget modification process those are the two options that we have.
Right, and I would just say that, you know, as we're unwinding Appendix K, and as participants are doing their person-centered planning meetings and discussions, every year you need to consider the person's assessed need for services and their goals for the year to make sure that you're making that request for services in the plan and doing that now. So we've been, unfortunately in COVID for the last couple of years, but as we're unwinding, we need to be looking at those services if there's an assessed need for them to be noted in the person-centered plan, and a revised plan could be completed, or that service could be included as you're doing your annual planning processes now. The next question is, are we receiving certificates of participation for today? It's a great question. No, the DDA does not provide certificates for participation in the webinar today. The next comment is, thank you to the two presenters for this detailed information. We appreciate the feedback. Thank you very much. Next question is, so we continue to use the Appendix K Form 5 past June 30th. Yes, as we've shared in some of our previous answers to questions, until further notice, please continue to use the COVID DDA Form 5 until further notice. Another comment, yes, this was a good presentation of information. Thank you for that. Next question is, from the information heard today, it seems that only CCSs are allowed to send in the budget modifications. Sometimes they may not be readily available. Could a support broker also send budget modifications to the FMS, CCing the whole team, of course, to expedite a request? Please advise. Thank you so much. Christy, you want to share your thoughts on that?
Well, I would first say that budget modifications, the best practice would be to meet as an entire team to go through that together. We know it's the best practice because it makes sure that the participant and their team really understand what's happening when changes are being made. Like I mentioned in a couple of our examples, we do really believe that CCSs have a unique role in the team as a paid member who is not directly impacted by changes made in the plan. And so that's why we are saying CCSs should send budget modifications.
Thank you, Christy. Our next question is, who does the FMS consider their client? The participant or the DDA or both? You want to share your thoughts and then I'll add some?
I do. FMS is a service within our waiver, and it is provided to people who self-direct their services.
Yeah, and the FMS, remember, just like other services that we have available, the participant is selecting the FMS. So from my perspective, the FMS, I would say both. The FMS and providers in general are service providers under DDA's service delivery system, and providers, FMS, support brokers, CCSs, they support the participant and provide those specific services to them. Another comment was people still having challenges with the handouts. For those who may joined us a little bit late, there seems to be a glitch in the handout section, but the documents are available online, and we will be posting the recorded webinar soon after the conclusion of the webinar. Donna will also be sending out the attachments afterwards. There's a question about the turnaround time supposed to be for vendor request. I think that's referring to Fiscal Management Service Providers. So when the documents are authorized by the participant and goes to the FMS then would be processing them. There was a question about COVID-5 forms has the option to request a new service. Is that still available? Christy did answer that to say under the public health emergency, that's still available, but that flexibility will end on June 30th. Reminder, please work with your teams. If there's an assessed need for that service going forward, then a revised PCP can be completed or can be completed in the annual planning process.
I have a note about vendors, Rhonda.
Sure, go ahead.
Question. So if we do have provider agencies or vendor agencies on the call today, keep in mind that if you are providing a service to a person who is self-directing, you should be reaching out to that person and their team regarding payment, because they are the ones approving that payment and getting it to the FMS.
Great. The next question looks like it's very person specific. And we'll share that with the regional office that they can provide additional follow-up on. Let me just see if we've got enough details. Yeah, so if you provided a specific example, Karen, your example that you've provided, if you can let us know which region, we'll be able to follow up with that. The next question is LTSS reflecting these rates in the detailed service authorization for plans that are in draft form after 4/1/2022? The answer is no. The new rates will become active in PCPs that are submitted or that are submitted after July 1st. So the July 1st date is the important one that we were talking about in option number 2. The next question is related to an initial PCP and asking if there's another step besides the 20-day review. As Patricia was sharing, when the DDA regional office receives a person-centered plan, it will be reviewed. If that plan is complete and correct based on PCP guidance and policies that the DDA has issued, we're able to approve and move that forward. If the plan is missing information, has conflicting information, then we will do what we call a clarification request so that that can be addressed so that we can make sure that the plan meets the standards so that we can approve it. Feel free to follow up with your CCS and regional office if you have a specific question related to the status of your plan. Next question is, what's the difference between personal supports and personal supports enhanced rates? Christy, you want me to take that or would you like to?
Go ahead.
Okay, great. So in our DDA waiver programs and our federal applications, we note personal support, so that's the service. But we do have an enhanced or a higher rate that is provided for people who have the need for supports related to a behavior plan or have a health risk screening tool score or 4 or higher, given that they may need additional assistance as noted in that behavior plan or nursing care plan. So for people who have that assessed need and have that documentation that's supported in their person-centered plan, personal supports enhanced can be offered, and then those rates would be utilized. Christy, can you share what does unallocated funding mean?
That's a good question. So when a team, a person and their team meet to create their person-centered plan with the CCS, they input their assessed need and the database that the CCS uses, LTSS Maryland. It calculates how much the budget, how much the DDA is approving the budget for. Then the team meets and creates a budget spreadsheet that should be less than that budget amount. So unallocated funding is the funding that is left from what DDA has approved after the budget spreadsheet has been completed and approved. So if we're looking at math, unallocated funds equals the detailed service authorization approved funding minus the budget spreadsheet approved funding.
Thank you. Our next question or comment is about the self-directed budget form. It apparently, one of the cells may be locked. For that, we will follow up on that. If that's the case, we will issue that out a notice so that people are aware. So we'll check on that. Let's see. Another question, if a plan was already approved and staff are making a higher wage than is in the standards, does it need to be revised? So Christy talked about that. And we have that in the slide in the guidance that you can refer to. Again, during the next annual planning, annual PCP process, that's when you can make those changes if you don't want to make them sooner. Let's see. Self-directed funds. Let's see. Just looking for some different themes here. So one person is asking if it's really necessary to do a budget modification for staff wage increases when the budget line item is at the max, but the staff is not paid at the max. The participant has just used staff change form to increase salary. Have we been completing the budget monitoring or completing the budget sheet wrong?
I can answer that.
Great.
So so this is what I would consider cost savings. So we are saying that you can go ahead and submit change forms to the FMS if they are within the reasonable and customary rates. So if you know you have funding to bring that rate up in the line items that you're using, then you do not have to do a budget mod form. The budget mod form would be to use to move money across line items. I hope that makes sense.
Yeah, thank you. We have a question about our new budget mod checklist and revised budget checklist. Want to know, should the CCS be sending to the FMS? Should they be added to the client attachments? Absolutely. We want to make sure we're sharing information with the team. All documents should be uploaded into the PC or into LTSS. So yes, do that. The FMS can also utilize that checklist when they do their review to make sure that it's meeting the standards before they process it. Let's see, regional leads have forwarded the approved PCP self-directed services to the FMS. Has this changed? Christy, did you want to answer that one?
Hasn't, but like we mentioned in the options, participants and their teams will need to be submitting some paperwork to the FMS regarding the changes, and so those need to be sent directly to the FMS from the team.
Thank you. This question came in, or comment came in from Taylor at 11:04 that the handouts are still not working. Again, we apologize. There seems to be an issue with the webinar platform. Donna will be emailing the 7 attachments after the webinar, and those documents are available on the website with the exception of the recording of the webinar and the PowerPoint. Next question. Do the new rates effective July 1st automatically increase the wage for personal support CDS? No, the rate increases do not automatically increase the wage for personal supports and CDS. That is a decision from the participant. They are the final decision makers. Christy, do you want to talk a little bit more about that?
Absolutely. Yeah, we really do believe that best practice is for people to be evaluating their employees regularly and fairly, especially if you have more than one employee. It does need to be equitable across the different employees that you have. So while the standards have changed, or they will change on July 1st, the only requirement that participants have to pay their employees is their minimum wage requirement in their jurisdiction. Other than that, they can choose to pay people what they would like. That is the great thing about self-direction.
Thank you, Christy. All right, let me see if I can get some new questions. You know, some of the questions that are in here are related to the calculations for revised plans. We talked about the budget sheet instructions for revised plans, so please refer to that. You can reach out to the regional office self-directed leads. They can help you. As we've noted, some people may have a person-centered plan that is reflecting less than the 12 months, and so some prorating may need to occur for those. Let's see. And we know that there are really individual situations that you may have been working with the regional office lead. So please continue to do that as we share information. So with that, and looking at the current time, we hope that the information today has been helpful to share information and guidance about what to do as the rates are changing. Again, the rates, the DDA rates are changing with an effective date of July 1st. Those changes will affect the self-directed budget allocation and also affect the self-direction reasonable and customary wages and vendor and provider rates. Today, Christy walked through options for people to consider if they would like to provide a increase to their staff wages or vendor and provider rates. She shared best practices is to really have a practice where you would be evaluating on a regular basis and giving feedback to staff and vendors and providers. We've shared that it's important that the participant is the driver and decision maker of these decisions and potential conflicts of interest. So please work with your team and note that your coordinator of community services is not does not benefit from those pay rate increases. So they are a very good independent advocate for you to consider. Your options are to use the budget modification process using the COVID-5 form and using that until further notice, to complete a revised PCP if you don't have enough funding, and that revised PCP would need to be created and submitted after July 1st. Or option 3 is consider making changes at a later time during that annual planning process or employee vendor anniversary. Also remember, we shared today that increases in wages and rates can be made at any time during the year. They just need to make sure that they're within the reasonable customary ranges. So again, thank you for participating today. We hope this has been helpful, and wish you a good rest of your week and stay well. Thank you.